Hi, and welcome to episode number 4 of this podcast for cleaners and cleaning business owners. My name is Casey, and I am the owner of The Big Clean Co. We're a cleaning company based in Melbourne. We also sell a cleaning product called For All Australia, which we ship to customers worldwide. You're probably here because you've seen me on social media. You might have listened to my past episodes. I have spoken about a little bit about my story. I've spoken about employing people in the cleaning industry. I've spoken about growth and my experiences with success and with failure. And today I'm going to talk about one of my most favorite subjects, which is profit, and specifically profitability, and some of the things that you can do in your business to increase your profitability that I've been implementing in my own business. Now, my interest in profit comes from the fact that when I left school, I actually thought I was going to be an accountant. It's what I thought I wanted to do. I got into a double degree at Monash University. I did commerce, majoring in professional accounting, and I did a communications degree, majoring in media and marketing. I did drop out, but I did a good couple of years, and I have the HECSTET to prove it. But I use both of those things, accounting and media, 110%. I use them every day in my own business. They come in so incredibly handy. Do you have to go to university to get this knowledge? No, you really don't. That's a beautiful thing about the internet. It is all there for you to learn. Now, whether you are a cleaner who just works alone, whether you are a cleaning business owner who has multiple employees, or whether you're just thinking about becoming a cleaning business owner, making that step from being that solo cleaner to having those employees work with you, you need a basic understanding of financial reports and specifically how to look at and understand a profit and loss statement. It doesn't matter who you are. That is something that should be getting taught in school, because any person who is self-employed needs to know how to read a profit and loss statement. Now, with the Big Clean Co., in the past couple of years, I have been super focused on growth, which is your top line of your profit and loss statement. And I have been, not to say not focused, but just less worried about the bottom line, which is ultimately the money that you get to keep. Now, we can change your bottom line by doing two things. You can increase sales to get more money into your business while keeping expenses the same, and you will increase your profit, your bottom line. Or you can keep your sales, your top line, the same, and you can decrease your expenses and your profit will increase. So you can get more money without actually selling more cleaning time. And that is something that I am specifically looking at in the Big Clean Co. in 2023. I'm less worried about growth. We had a huge amount of growth in 2022. And as I spoke about in the last episode, which was about growth, it's important to get your foundations right once you do have a bit of a burst of growth. And that's what 2023 is about for me. It's about making sure that ultimately I have as much profit out of this business as possible, because I am in this business to get money. Would I be doing this every day if I wasn't getting money? Probably no. I think I'd just be out in the country somewhere riding my horses. But I do love what I do. However, I am very money motivated, as is a lot of people, if not everyone, who is in business. You are motivated by money. How do we get more money? All right, let's talk about profit in the business. So I want to give an example of my partner, Chris. His mentor for many years is a very well-known businessman. I'm not going to name drop in this. There's no point. This is just a bit of a story that he shared, which I think is worth sharing to you guys too. So he has stores everywhere. You've all probably got one of his stores in your neighbourhood if you live in Australia, New Zealand, or even countries throughout Asia. He discovered, or not him, but his team discovered that air cons in the retail stores, if you have that aircon on 18 degrees, if you put it up 4 degrees to 22 degrees, you don't actually feel much difference when you walk into the store. But you're using less energy and you save money on your energy bills. Now, this is crazy. So if he put those aircon machines up 4 degrees to 22 degrees, they saved thousands and thousands and thousands of dollars across all of their stores. Those are the kind of things that you need to be looking at in your cleaning business Maybe it's not the aircon, but there are things on that profit and loss statement under the expenses that you can be looking at, that you can change, that will immediately give you more money in your own pocket. What a great thing that is. You don't have to go out and sell more cleaning time, and you can have more money. So to get a basic understanding of profit and loss statements, there are free courses, webinars, masterclasses that the Australian government actually offer to new business owners that you can do. You don't have to go to university. I have no doubt that there is endless free resources on the internet, whether it's watching a YouTube video, whether it's reading a blog, and you can find out how you can learn how to look at your profit and loss statement. And once you've got a profit and loss statement, so I do mine quarterly, and I look at them quarterly, and in particular, I looked at the December one, and we are changing multiple things on that December profit and loss statement so that we can positively influence our March, which is the next quarter, profit and loss statement. Some of those things that I look at are where the biggest leaks that come out of the Big Clean Co. So we do residential cleaning, and we mostly work in teams of 2, and so they'll do 4 or 5 jobs in a day. One of the places that money just falls into a black hole is travel time for us, because we pay employees travel time, as you have to in Australia, and travel time is not paid time. So fortunately, the rostering software that we use tracks travel time, and I can week by week see how the travel time is related to the actual invoiced hours. We don't necessarily invoice by the hour, we do flat rate, but it's all calculated by the hour because you are paying your staff hourly. So every single week I do the diary in advance. Friday today, the diary is done for next week, and right now I am confident that it is the most profitable that it can possibly be for next week. Now on Sunday, it's without a doubt I'm going to get a message from either a client whose kids are sick and they don't need their house cleaned on Monday, or I'll get up on Monday and a staff member will be sick. Whatever it is, someone's going to cancel, someone's going to call in sick, and I'm going to have to change the diary. Every time I do that, it is my first job is to make sure that that day still remains profitable, because there is no point me sending cleaners out when I know that we're going to lose money. So travel time is one of those really big, obvious ones that you can be looking at that will increase your bottom line. Other places that you can look are the software. So at the moment, I use rostering software, I use accounting software, and I use software that takes credit card payments. Something we discovered was that if we can invoice our clients out of the rostering software, or we can invoice them out of the accounting software. We got into the habit of invoicing always out of the rostering software because it was so easy. You just click a button and the email goes. There's an extra step if you do it through the accounting software, because you still have to send it from the roster over to the accounting software, and then you send it to the client. What I found out was we use Stripe for the credit card payments. Our rostering software, which is ServiceMate, which is what we use right now. Do I recommend it for your business? I don't know. It works for us now. Is it perfect? No, but it's what we use. So ServiceMate, however, they do not charge the credit card fee to the client. They make the business cop it. So if we invoice a client for $200 and the Stripe fee for taking the credit card payment is $10, we will get $190 of it. And so the client pays $200, we get $190, Stripe take $10. However, we found out that if we send it through to our accounting software, which is Xero, which I've been using since 2014 and which I love Xero. It is so super easy when you learn it. And anyone can learn it. That's the beautiful thing about Xero, is that it doesn't matter if you've done 2 years of an accounting degree or if you dropped out of school when you were 15. Xero is made to be very user-friendly, and there are just so many good articles and stuff like they have on the internet that you can learn how to use that software. So we found out that if we invoice the client through Xero, it will charge the client for the credit card fee for Stripe. So if the client's invoice is $200, we will still get that $200, and Stripe will charge the customer an extra $10, and Stripe will get their money. So the client pays $210. That's really important to us. We do a lot of invoices every single week, every single day. We do a lot of invoices and it adds up to hundreds of dollars a quarter. So before, when we were invoicing through ServiceMate, we were paying hundreds of dollars for the privilege of giving our customers this ability to use a credit card. We immediately took that off, and I have $300 a month, I think it was. I have $300 a month extra that I'm no longer paying, and that's my money. I didn't have to increase sales. I just had to adjust and make sure that I knew exactly where the money was going out, and so that I could decide whether it was money that really did need to be going out or whether I could cut it back. So that's one of the things to be looking at. That software that you use can really make your life a lot easier, but you need to make sure that you're not overpaying for it. It's really important. Another great benefit of starting to learn about profit and loss statements, financial reporting, understanding how the accounting software like Xero works, is that if you are a solo cleaner, it's actually really easy to do your own BAS, your own business activity statement, which you have to do every quarter. To do your accountant should be able to set you up so that you are able to do your own BAS. If you are paying for it currently, you might be paying $250 or $300 a quarter. It's $1,200 a year that you're paying your accountant to do something that you can actually learn to do yourself very easily when you have an accounting software like Xero that calculates all the amounts for you. So when you start to learn this stuff, you can save yourself money. If you're a solo cleaner and you're saving $300 a quarter, that's 1 or 2 houses that you're cleaning. You don't have to clean to get the same amount of money because you were having to give that money to your accountant. So that's another example of how you don't have to increase your top line sales to increase the money that you have in your pocket. Another report that is really helpful to do that ties very closely into the profit and loss statement, is a report on all of your recurring customers and the prices that they're paying. So we've just done this in the last week. We did a Google Sheets document that listed all of our clients, the flat rates that they pay, and the time that our staff have been there on the last 3 visits. So then we were able to get an average of how long our staff spend at their house. Then we were able to calculate what their flat rate is. So if their flat rate is $140 a fortnight and our team is spending on average 2 hours there, then the hourly rate that we're making from that job is $70 an hour. That for me is a beautiful job. I love that one. If it's over 65, I love it. We don't really do many jobs where we charge hourly. They're usually our weekly clients whose houses kind of alter from week to week on what we need to be doing. But most of our clients are on a flat rate, and $70 is very healthy for my business. Anything under 60 is just not a good one, because by the time you pay staff wages, by the time you pay everything involved, then what's the point in even going there for under $60 an hour? So when we did this table and we calculated what each client's value is per hour, I then color-coded them. So the ones that were over that $65, $70 mark were green. Don't need to do anything with those. They're perfect. They can stay as they are. Then I had anything that was above 55 but below that 65, 70 mark, I made them orange. Orange for me meant don't need to raise that price immediately, need to keep an eye on it. Definitely will need to raise it before the end of the financial year when wages go up again. Anything that was below 55 an hour was red. And what that meant was the price had to be immediately raised. The reason being, I don't want to have to pay for the privilege of my staff cleaning someone's house. I don't want to be out of pocket for that. And I think I had 3 customers who have been my customer for almost the whole 5 years I've been in business, who were under that $55 mark. And the reason for that is because until I had an admin person, I was very resistant to raising my prices. I did not do it yearly. So some of those customers in 5 years have only had 1 price increase. That's after wages have gone up every year, superannuation has gone up, work cover premiums, everything has gone up. And I left these clients' prices the same, and I was paying for it because we were going there. One of them was only, I think, $42 an hour, which I 100% do not make profit on $42 an hour. So what I did was I emailed each of those clients and I explained to them, I haven't raised your price since whatever year it was. I've only done it once in 5 years. Unfortunately, I'm going to have to raise it. Well, it shouldn't be unfortunately, because they should value what we do and they should be okay with it, knowing that everything has gone up at the moment. And I said, out of goodwill, we'll come for one more clean and we'll do it at that rate. But going forward from then, we're going to need to raise the price to this. 2 of them gone immediately. They said they didn't want to pay a higher rate and they'll find another cleaner. That's fine. Good luck to them. We don't need clients who don't value our work, and ultimately they were not paying what we're worth and wasn't worth us going there. So we did lose those clients straight away. But the thing about those red clients on that report that you do is that it doesn't matter if you lose them. You were losing money going there anyway. So don't worry about those. The reason I don't raise the orange ones' prices immediately is because I knew that some of the red ones would go and wasn't really willing to lose too many clients at once. And so we will do those orange ones periodically over the next few months to get them up to the green with the green ones. Majority of our clients were green, and that is in major credit to having Caitlin, our admin person, come on full time, because that has been her job. She's made sure that we're getting clients in who are paying what we are now charging. She's very good at that. I'm not as good at asking for extra money, and I recognize that within myself. So that's why I have someone else who does that. That's a beneficial thing about employing people who complement you, who are able to do things that you're unable to do or unwilling to do. That's a great thing about building a team. So I've built a team who are able to do things that I'm not able to do. I don't like asking customers for extra money. Employ someone who does, and that is super helpful. So they're the 2 reports that I really think every person who's in business, whether you're cleaning by yourself or cleaning with a team, you need to know how to pull up and how to pull apart and how to tweak and to make sure that your bottom line profit is healthy. Otherwise, what's the point in being in business? So it's your profit and loss statement, and it's also your client report, and making sure that those clients are always in the green and that you're always in the green, because we're motivated by money if we're in business. And I know I'm certainly in business motivated by money, and I love looking at those profit and loss statements, and I love looking at those reports, and it's really nice to have this clear view of where the business is at and where it's going. And I hope that what I've shared with you now is very helpful, and feel free to message me on social media if you've got any questions, or just to let me know if it's been helpful, because I'm only here discussing this because I want to help you guys, and I will discuss whatever you ask me to discuss. So that was episode 4, profitability. I look forward to seeing you in episode 5.